Hello, everyone. Thank you so much for joining us yet again on our weekly Mortgage in Review. I'm Alex Ward, the broker owner of Maxwell Devonshire Realty and the 2022 Broker Manager of the Year for the Realtors Association of Edmonton. I'm joined today by our lovely Kayla Frerot, home financing advisor with ScotiaBank and a true professional in the field of mortgages. I'm stuck in Calgary at the Marriott Hotel on a in-between flight delay, and Kayla is at one of her many branches supporting the local team there. So Kayla, I know today we're talking about what documents are required for a credit mortgage application. Of course, this is going to be lender dependent, but the floor is yours.
Thank you. Good morning. So I decided to keep going with the most commonly asked questions when doing a credit application for a new mortgage. So part of the mortgage application, of course, is going to be gathering the documents we need to verify your income and your down payment, and obviously the credit report as well. So when we're looking at what documents you need to start getting ready or to start thinking of when you're looking to purchase a home and get a mortgage, and of course, as Alex said, it is lender dependent. What Scotiabank is looking for is not always what the other banks are going to look for. Normally, it's pretty common what is going to be needed when you're doing a credit application, but again, those things can change at any time. So what I'm going to let you know today is just some general documents that you need to get ready that we will most likely take a look at when you are doing a credit application. So it is dependent on, when we talk about income and what documents we need for income, it's dependent on how you get paid and what kind of business you're in. So if we take a look at just a regular position where you're getting paid 40 hours a week in hourly wage, it's going to be very different than if you're business for self. So we'll go through each of those pieces and what that looks like. So when we are looking at if you are hourly, if you're salary, if you're working any other job besides being business for self, we are going to look for a pay stub. Pay stub is our number one document that we'll look for, and we'll always look for it from everybody. So a recent pay stub showing what you're paid, what your year-to-date earnings are. Do they match the other documents that we've looked at for your income verification? And does everything look right on that pay stub? So apart from the pay stub, there is a secondary piece of income verification that we will need. Now, there are some options with that. So with the secondary piece, we would either look for a letter of employment. Now, that letter of employment is a letter from your HR department that is going to note, it's going to be on letterhead and it's going to be signed. That's one of the requirements. It's going to note your rate of pay, your guaranteed hours, and if you are or not on probation. So letter of employment is a secondary piece we can take. We can take 3 months bank statements showing your pay being direct deposited. We can also take a recent T4. And again, that secondary piece just verifies what income you're making and does it match the pay stub. So apart from that, if you are in a position where you do make overtime or bonuses, or you have a living allowance or a vehicle allowance, those types of extra pieces that go into your income there, then what we'll look for is your last 2 years T4s, and then again, that pay stub. Now, the reason why we look for the last 2 years T4s is sometimes we'll take an average of that income. So then we can use the bonus income, the overtime, the living allowance or vehicle allowance income. Apart from that, if we are looking at the business for self side of things, that becomes a little bit different. Now, if you are business for self, I'm sure you know that there is a little bit more paperwork required. So depending on if you are incorporated or not, that'll make a difference there. But what we will look for anybody that's business for self is your last 2 years tax returns. So what that means is your last 2 years T1 generals, so the full T1 generals, which is what you get from your accountant when they file your taxes, and then the notice of assessments that you'll get from the CRA once your taxes have been completed. So the last 2 years, we will always look for that. There's no change in that. We definitely have to have your last 2 years taxes. And the reason why is what we'll do is we'll look at how you were paid. So were you paid dividends? Were you paid employment income? What does that look like? Is there capital gains on there? Is there rental income? We look at all those pieces on those T1 generals. So we definitely need those. And we also look to make sure that on your most recent notice of assessment that you don't owe any taxes to the government. Now, apart from that, when you are business for self, we will look sometimes for your business financials. And the reason why we look for that is if you aren't reporting very much income and you do keep a lot of income in your company, sometimes we can look at your business financials and use some of that income on there to go towards your income for the application. Now that is dependent on the file and the programs that we have in place, but we do have a really good business for self program through ScotiaBank that we can definitely take a look at those business financials if we're not getting enough income on those tax returns. Now, when you are business for self too, there is a down payment piece there, and I do get asked about this a lot. Now, if you are looking at taking the funds out of your business account for your down payment, if there is any shareholders in your company, we will need a letter from your accountant noting that you do have access to those funds and how they're going to be paid to you. So will they be paid to you by dividends? How is that going to look? And if you don't have any other shareholders, then that's a different story. Then we'll just get your bank statement, your business bank statement showing that you have the fund in there. So that's business for self. Again, there may be some extra pieces depending on what your situation looks like and what your file looks like. There may be additional documentation that's required, but that's kind of the basics that we're looking for. Now, if we are looking at a file that has just pension income or investment income, that also looks a little bit different. If you're retired and not working, but you are buying a home. So for your pension income, we'll normally look for those T-slips. So the T-slips from the last year that you got with your taxes. If it's investment income, we'll look for the investment income, the investment statement showing the balance of the investment that's being paid out, and then maybe some bank statements as well, or your T-slips, again, depending on that file and the different situation that you have. So when you are looking to get ready to purchase a home, you want to make sure that you have all your documentation or you have access to it. So if you are in a job that if you're trying to get your pay stub, you have to go through HR to get it, depending on the system, if you're working off grid, anything like that, just to make sure that you get ready for that. Because before we do a pre-approval, we like to look at all the documentation just to make sure that if anything comes up, we can mitigate that at that time. So just a really good thing to look at before you start looking for a home and get your pre-approval. So that's kind of the documentation that we'll need, depending on if you're business for self or if you're working a regular job, if you have bonus or overtime. Again, definitely reach out to your home financing advisor and ask those questions. If you're unsure, you can reach out to me. My number is 587-357-7850, and my email is my first name, Kayla.Frerot@ScotiaBank.com.
Nice. Well, thank you so much, Kayla. I know there's a ton where we live in Alberta. Albertans are known for their entrepreneurship. So,
Yes.
and picking entrepreneurship sometimes so the old tax man doesn't get all of the money. So it's important that you still know that you still have some financing options out there. But if you are business for self, like Kayla was iterating, it's good to plan ahead because you have to work alongside your accountant, especially if you're planning 2-3 years out for a home purchase, so that you can have your business financials match what lending policy is going to be with you. Trust me, I know from personal experience, it's best to plan ahead on those things because a little harder when you're doing that last minute, oh, this house is beautiful, we need it. Oh, wait, nothing is planned properly, and we need to make some creative side notes. So, Kayla, thank you so much again. Kayla Frerot is a home financing advisor with ScotiaBank, and she is a preferred partner of Maxwell Devonshire Realty and one of our upcoming golf hole sponsors. She's got a hole-in-one hole. So there's still time to register. So if you haven't registered yet, make sure you do. But if you are watching this live on Facebook, thank you so much for joining us every week. If you're watching this on YouTube, smash that subscribe button to ensure that you get to be kept up to date with all of our content. And of course, if you're listening to our podcast, Maxwell Devonshire Realty Podcast, hit that subscribe button as well so you don't miss a single piece of valuable content. Kayla, any last words before we go?
No, I'm good. Everybody have a great day.
Wonderful. See you guys next week then.